Shalom, brothers and sisters, and welcome to BLD Treasury Information Session on Good Governance. My name is Isette Natok, and I will be your presenter. First and foremost, thank you all for your donations, incredible dedication, and hard work in upholding BLD's mission and meeting our obligations as a charity here in Canada. Before we deep dive into our topic on good governance, let us take a step back for a moment and imagine BLD as a ship setting sail on a calm and serene sea. Much like this ship, BLD aims to navigate the vast waters of charitable work with a steady hand, clear direction, and a commitment to excellence. Good governance is like the skilled captain and crew steering the vessel. It ensures we stay on course, avoid turbulent waters, and reach our destination safely and efficiently. Just as a well-governed ship relies on its crew's adherence to navigational principles, our charity relies on the principles of transparency, accountability, and integrity to guide our actions and decisions. BLD's mission is truly special as it transcends the boundaries of individual efforts. We not only uphold holistic goals for our families and our communities, we also advocate for good governance. We draw inspiration from the letter of St. Paul to the Romans, which reminds us to respect the authority established by God. Let everyone be subject to the governing authorities, for there is no authority except that which God has established. At bukas loob sa Diyos, we align our actions with His divine guidance by respecting the structures God has established, while actively participating in social justice and community service. By doing so, we not only adhere to these teachings, but also demonstrate our dedication to creating positive change and promoting the common good. Let us continue to work together, open in spirit to God, to build a society that reflects His love, justice, and compassion. Let's start by clarifying the distinctions between a non-profit organization and a charity, and why it is important for our operations. We'll address the potential risks and consequences of non-compliance, as well as the measures we have in place to ensure we meet CRA's regulatory requirements. We'll then move on to our guides and checklists, which are essential tools for maintaining our high standards of governance and operational efficiency. Finally, in Part 2, I will walk you through our updated BLD standard forms, which streamline our processes and ensure consistency across our organization. As we carry out our activities throughout the year and into the future, it's crucial to take a moment to reflect on our current practices. Are we consistently meeting the CRA's compliance requirements for registered charities? Are our processes managed in a way that ensures transparency and trust while adhering to charity regulations? By the end of this presentation, I hope you will have a clear understanding and answers to these questions. Do you know that it is crucial for our work to understand the differences between a nonprofit and a charity? Simply because not all nonprofits are charities, but all charities are nonprofits. Nonprofit societies serve various purposes, such as civic improvement, social welfare, and recreation, such as sports clubs, professional associations, and hobby groups. Charities, on the other hand, operate for specific charitable purposes, such as relief of poverty, advancement of education, advancement of religion, or other community benefits. Nonprofits do not register with the Canada Revenue Agency for tax purposes. Therefore, they do not receive tax benefits nor can issue tax receipts to its donors. They do not earn profits for their members because all money supports their cause or goal. However, nonprofits can register as charitable organizations to use funds for their mission and administrative needs. To operate as a nonprofit organization in British Columbia, the charity must be incorporated as a society under the Societies Act. This means it must adhere to the provincial regulations, including maintaining bylaws, holding annual general meetings, and filing annual returns. To gain the benefits of a registered charity under the Income Tax Act, the charity must apply for and receive charitable status from the CRA. This status allows the charity to issue tax receipts to donors and be exempt from paying income tax on donations and income from their activities. It also requires the charity to operate for specific charitable purposes I mentioned in the previous slide. By complying with both the Societies Act and the ITA, a charity in BC can enjoy the benefits and fulfill the obligations at both the provincial and federal levels, ensuring smooth operation and maximizing their impact. This system is designed to encourage charitable giving and ensure that funds are used for public benefit. Is a church a charity? Yes, a church is considered a charity. What you see here are a couple of examples of registered Catholic Church with a CRA. Like BLD, we all enjoy the same advantages and face similar obligations under the Income Tax Act. We all fall under the same designation, charity type, and category, committed to serving the community and adhering to the principles of good governance, transparency, and accountability. While a registered charity enjoys significant benefits, it carries important and heavier obligations. A charity must devote its resources primarily for their stated charitable purposes. It must maintain oversight and management of how resources are utilized. They are required to file an annual information return or T3010 to the Canada Revenue Agency. They must meet minimum spending requirements or disbursement quota on charitable programs and activities. They must maintain thorough and accurate financial records. They must ensure donation receipts are properly issued and contain all necessary information. And lastly, they must be based in Canada to qualify as a registered charity. The Canadian charity sector is a vital part of our society and economy, with revenue of over $304 billion and expenditures of about $281 billion. To ensure that registered charities meet these obligations and maintain the benefits, the Charities Directorate of the Canada Revenue Agency plays a crucial role in ensuring that charities comply with the Income Tax Act to maintain the integrity of the charitable sector and the confidence of Canadian donors. How does a charity chosen for audit? There is no specific revenue threshold for a charity to be audited. The CRA uses a risk-based approach using the following criteria: referral from another area within the CRA, public complaints or tips about suspected tax cheating or non-compliance, information from other government departments, articles in the media or other public sources, review of specific legal obligations under the ITA, information from its T3010, and follow-up on a previous compliance agreement. Audits can result in escalated compliance measures ranging from education letters, compliance agreements, sanctions, and revocation of charitable registration, depending on the severity of the non-compliance. To illustrate, as of February 13, 2025, out of 136,300 Canadian registered charities, a surprising 37%, or 50,721, were revoked. Of these, 25,100 failed to file, 611 were audited, 24,692 voluntary revocations, and 98 for other reasons. 29% revocations were from advancement of religion. On your top right side, there were 2,075 charities that were revoked between 2024 and 1.5 months of 2025. 3 were from the religious group. On your bottom right, out of the 2,075 revocations, 277 were from BC. Why am I showing these figures? I am showing these figures for us to be aware and to highlight both the scale and volatility of the charitable landscape, reflecting various operational, administrative, and strategic challenges faced by organizations across different sectors, and the importance that we remain compliant. What you see here are a couple of registered charities with revenue under $10,000 and underwent an audit and had their status revoked by the CRA due to their failure to maintain adequate books and records, improper issuance of donation receipts according to the Income Tax Act, and failed to file their annual return. The CRA publishes charities that have been revoked, detailing the specific requirements of the Income Tax Act that were not complied with. The CRA has provided comprehensive guidelines and checklists to help charities comply with their obligations. These resources cover various aspects of charitable operations, but we will just focus for now the top three guidelines on what activities are permissible for registered charities to ensure they align with their charitable purposes. What are the requirements for maintaining accurate and complete books and records to support financial transparency and accountability? And lastly, receipting. A registered charity must focus on charitable purposes and use its resources for charitable activities. It can engage in business activities if they support the charity's goals, such as a thrift store funding program. Social activities alone are not considered charitable. They should either raise funds or support the charity's goals. Fundraising activities are permitted but should not be the primary focus. Expenses should be reasonable and necessary, such as those incurred for charity events. What this means is that CRA requires that all activities should consistently support the charity's mission and comply with the Income Tax Act. In short, a charity's purpose is its mission, its revenue is the money it earns to support that mission, and its resources are the assets it uses to achieve its goals. Charities must maintain proper books and records. Keeping these records organized and up to date ensures that the charity remains compliant and maintains transparency with stakeholders. This includes source documents such as vouchers, receipts, invoices, bank statements, expense reports, written agreements or letters supporting the vouchers, travel logs, donation receipts, minutes of the meetings of officers and members, 10-year gifts, governing bylaws, financial statements, and T3010, and financial transaction entries. Now let's look at the definition of terms. Cash gift is a donation made in the form of money, such as currency, checks, or electronic transfers. Cash gifts are straightforward and easy to value, and they often come with an immediate tax benefit for the donor. Non-cash gift or gift in kind is a donation made in a form other than money. These can include goods, property, stocks, or other assets. Non-cash gifts can be more complex to value and may require additional documentation or appraisal to determine their fair market value for tax purposes. We will discuss in the following page what are the typical non-cash gifts in BLD and what constitutes eligible or not eligible for donation receipt. FMV or fair market value is the price that property would sell on the open market between a willing buyer and a willing seller, both having reasonable knowledge of the relevant facts. Intention to give threshold is used to determine whether a donation qualifies as a true gift for tax purposes. If the advantage of the donor is more than 80% of the fair market value of the gift, it is generally considered that there is no true intention to make a gift. In such cases, a charity cannot issue a receipt for the donation. De minimis threshold is a rule that states that if the total advantage does not exceed $75 or 10% of the amount of the gift, whichever is less, the advantage is not included in the calculation of the amount on the receipt. Split receipting is the method CRA uses to calculate the eligible amount of a gift for receipting purposes when the donor has received an advantage in return for his or her donation. To figure out the eligible amount of the gift, a charity has to subtract the fair market value of the advantage from the fair market value of the gift. The criteria for split receipting is where a donor receives an advantage in exchange for a gift. A charity must be able to come up with an accurate figure for the fair market value of that advantage. The gift minus the advantage still has to constitute a voluntary transfer of property and meet the intention to make a gift threshold. Here is an example of the intention to give threshold and how to determine whether a charity can issue a donation receipt. Let's say you donated an item worth $100 to a charity and in return receives a thank you gift valued at $50. The fair market value of gift is $100. The fair market value of the advantage, the thank you gift that you received, is $50, and the intention to make a gift threshold is 80% of the fair market value of the gift, which is 100 times 80% is 80. Since the fair market value of the advantage received by the donor, 50, falls within the intention to make a gift threshold, which is 80, the charity can issue a receipt. If the fair market value of the advantage had been $81 or more, the intention to make a gift threshold would not have been met and the charity could not issue a receipt. Sometimes, although not very often, the intention to make a gift threshold has not been met, but there was a clear intention to make a gift. In these cases, the donor must be able to prove to the CRA that they intended to make a gift. Here is an example of the de minimis threshold to determine how much to deduct from the gift for donation receipt purposes. Let's say you donated an item with a fair market value of $100 to a charity and in return receives a t-shirt valued at $6 and a pen worth at $2. The fair market value of the gift is $100. The value of the advantage is $8. De minimis threshold is the lesser of $75 or 10% value of the gift, which is $10. Since the combined value of the advantage is $8 and is less than the de minimis threshold of 10, the charity does not need to subtract these advantages from the value of the gift when issuing the receipt. If the fair market of the advantage had been $11 or more, the charity would have to subtract the advantage from the value of the gift when issuing the receipt. In addition, if the fair market value of the advantage had been more than $80, the intention to make a gift threshold would not have been met and the charity could not issue a receipt. The de minimis rule does not apply to cash or near cash equivalents, for example, gift certificates, vouchers, and coupons. The object of a fundraising event, for example, the meal at a fundraising dinner, or the green fees, cart rental, and meal at a golf tournament. The charity must always subtract the value of these items from the fair market value of the gift before issuing a receipt. We are often asked whether BLD can issue a donation receipt in lieu of out-of-pocket expenses incurred by the volunteer. According to the CRA, a charity cannot simply issue an official donation receipt to a volunteer to cover an eligible expense instead of reimbursing them with a check. What are eligible expenses? Again, it must be related to our mission, which falls under the allowable activities. CRA recommends a check exchange method, where the charity issues a check to cover the volunteer's eligible expenses and the volunteer writes a check back to the charity for the same amount. This is called the right to reimbursement. If a volunteer has the right to reimbursement, the charity can treat this right as a non-cash gift and issue a receipt for tax purposes. The volunteer must provide written direction to the charity to issue a receipt instead of reimbursement. To cover this requirement, CRA suggests a caveat wording for this, which will be part of our standard form. It says, I direct that the funds to which I am entitled by way of reimbursement for and would otherwise be forwarded to me by cash or check be transferred to as my gift. How about a gift of service? A charity cannot issue a receipt for a gift of service. At law, a gift is a voluntary transfer of property without consideration. Contributions of service, for example, time, skills, effort, are not property. Therefore, they do not qualify as gifts for the purpose of issuing official donation receipts. Registered charities cannot issue official donation receipts for gifts of services. However, if a charity pays a service provider for services rendered and the service provider issues an official receipt or an invoice and then chooses to donate the money back, the charity can issue a receipt for the monetary donation. This is often referred to as a check exchange. In such circumstances, these two distinct transactions must take place. A person provides a service to a charity and is paid for that service, and that same person makes a voluntary gift of property to the charity. A charity keeps the invoice issued by the service provider, and the invoice and check exchange not only ensure that the charity is receiving a gift of property, but they also create an audit trail, as the donor must account for the taxable income that is realized either as remuneration or as business income. What about business sponsorship? Can a charity issue a donation receipt? Sponsorship occurs when a business makes a donation toward the cause of a charity's activity or event, and in return, the charity advertises or promotes the business's brand, products, or services. Sponsorship situations are unique and should be looked at individually. Some factors to consider are source, purpose, contracting, naming, and valuation. Sponsorship is an advantage and its fair market value is generally deducted from the amount of the donation for visiting purposes. It is difficult, if not impossible, to calculate the value for sponsorship. When the value cannot be calculated, the charity cannot issue the business an official donation receipt. However, the business may be able to include the sponsorship costs in its advertising expenses, but only if the sponsorship is considered reasonable and was given with the intent of generating income. That wraps up the first part of our info session. We'll dive into the BLD forms in the next segment. For now, we hope the information we've shared today has given you valuable insights into the importance of following the CRA guidelines and our commitment to good governance. By sticking to these practices, we ensure our charity runs with transparency and accountability, making the most of every contribution. On behalf of the Treasury Ministry, Eddie, Josie, and myself, thank you so much, and may God bless and keep us all.